work hard and play hard. Last weekend, I played hard. I had a great weekend. Drove over a little bit through fall colors. We're still not at peak color here, but nice fall colors. Nice drive over to see some friends I haven't seen in far too long. Hung out with them for the weekend, and then one of those nights we drove over just a little bit more over to Nashville and Bridgestone Arena and got to see a band I have followed since I was like, I don't know, 10 or younger. I don't even know. Depeche Mode, the Memento Mori tour. They did a really nice tribute to Andy Fletcher. And I gotta say, the audio and the video were the best of any concert I have ever been to ever. I was at the filming of the show, the Cure's show for was that 1992 for the Wish Tour? And then they filmed the show I was at actually the Palace of Auburn Hills and saw that, and that was phenomenal. But this outdid it. And Martin and David's voice were just spot on. You know, sometimes when guys age, you know, you got to worry about the voice, but their voices were absolutely spot on. And Gen X represented well. There wasn't one butt in the seats the entire concert. It was awesome. But now it's back to working hard. We played hard, we worked hard, got back home. We're going to do the weekly note for this Monday, October 23rd, 2023. So a little bit light here starting off on Monday. Some auctions, activity index. I think that one came in a little stronger than the forecast. Than previous, but forecast was 5. It was 0.2. But regardless, Monday's light. On Tuesday, we have some PMI numbers coming in and Richmond Fed manufacturing. On Wednesday, we have a slew of mortgage data at 7 a.m. And then at 10 a.m., there's some new home sales data. And then I think on 4:35, that's after cash close in equities, we have Chairman Powell's speech at 4:35 p.m. Thursday, we have durable goods. We have GDP, some GDP data. We have initial jobless claims. We have core prices quarter over quarter. So this Thursday looks like the bigger day, right? PCE prices quarter over quarter, all coming out at 8:30. So at 8:30 on Thursday, there's just a slew of data, as you can see here. Durable goods, GDP growth rate, durable goods orders ex transport, GDP price index, initial jobless claims. On Friday, we have core PCE price index month over month. And so that's a biggie here. It's associated, PCE price index and month over month and year over year. So, and then Michigan sentiment is at 10. So Thursday and Friday are the big days as far as the calendars go for the upcoming week, or at least the way we look at them. For today, for earnings, let me scan through this quickly here. Not a lot stands out to me for today. I do know, though, it's not in earnings. I know Seagate, STX, is the ticker symbol. I follow them pretty closely. Their general meeting is today. But as far as today, I don't see much on the calendar as far as earnings goes that jumps out at me. Moving over to Tuesday, we have Logitech, Xerox. Xerox is one I follow pretty closely. 3M, General Motors, Quest Diagnostics, Halliburton, Coca-Cola. Those are the big ones that jump out for the 24th. Wednesday, we have LG. Let me see here. That's Walmart's Mexico. Deutsche Bank, Lloyd's Banking, Santander, and some Santander earnings. And then what was that? That was Wednesday. So let's move to Thursday. Thursday we have a Volkswagen 110, Lear, Mercedes-Benz, and then coming to Friday we have big one there as Chevron on Friday. And going through it 2 or 3 times, that's the big one that sort of jumps out at me. Moving over to the SOFR curve, 3-month SOFR curve with the Fed plots in them, which I find incredibly helpful. It's funny, people are like, haha, what are these worthless Fed plots for? They're actually worth quite a bit. So 3-month SOFR, as you can see here, around Oct of 24 to DC 2024. That's a big area of play right there. So obviously we have the front whites here that are pretty much going to be spot on. But the DC 2024, you see a lot of this I just think there's a lot of action and things to be discovered. I'll put it that way. I'm trying to be careful here. But things to be discovered is sort of in that particular region of DCA 2024. You look at the U.S. Treasury curve, and the U.S. Treasury curve sort of points something out that I've been saying for weeks now. I don't see why there's any reason to own anything or be buying anything. I could be wrong, but for me, and this is just a bias, this is just a general overlook as we talked about in those very first three entries of the weekly note. This is not specific bets. It's just to get your brain on to the next week. I just don't see any reason why I'd want to be owning from the 5-year out at all. Which means I don't see why anybody would be buying that, and we've seen that, right? So if you're new, remember, interest rates are opposite of price, right? It's just like a dividend stock. When this dividend stock goes down, well, what happens with the yield? The yield goes up, right? It's very obvious. Well, it's the same thing with bond prices. If bond prices are decreasing, then yields are increasing, and vice versa. If yields are dropping, then prices increasing, right? So just think of it, at least maybe because I have so much that pays dividends as far as stocks are concerned. That's what makes it easy for me to remember that. It's very, very easy. Price goes down, yield goes up. Price goes up, yield goes down. Right? So, but it just highlights everything I've ever said. Now, there has been some, I don't want to call it doomsday saying here around the back end of the curve, like everything's come unglued and now all bedlam will break loose. Well, very obviously, if you've tied in interest rates and we're at 3%, you're feeling a tremendous amount of pain on price. But I view this as far as the U.S. Treasury curve of yields increasing back here is only healthy. I mean, doesn't it have to happen? So I know there's been some names that I respect that are like, the bond market's completely lost its anchor and now it's just free floating and this is just not good. I view this, I'm more along, I know Conks on the Twitter stream, I'm more of his line of thought. I think it's healthy, quite honestly. So just my view, and I still don't see any reason why I would be wanting to buy or own anything from like the 5-year out. And you'll see that very obviously reflected, as we have been saying for a long time now, on the weekly note as far as the latter half of the bond curve, IEI, IEF, TLT. Now let's move over to markets as a whole and just our stance on markets and line them all up in a row, so it just sort of gives us this composite view that I like to have. We generally talk about a proprietary model that we have that just looks at overall risk, right? Do you want to be buying risk assets or buying stocks? Do you want to be in there and buying everything because you think it's risk on, or do you think you're neutral, or is it gone risk off? And when we look at our proprietary model, and again, I cannot highlight this enough, it's just a broad general overall bias. It's neutral at the moment as far as risk assets. The VIX is obviously popped and cleared above 20, so it's 2171 or something like that. And VIX term structure, still contango, still nothing really there normal. It just sort of looks normal to us. I'm pulling it up on my other monitor now, and yeah, I'm just going down all the terms. Definitely looks normal to me. So that's VIX. Then we move on to, where are we at? Equities. So equities sort of highlight something. I had mentioned that, what was it, 43.75 on the cash SPOOs, cash SPX was a region we remained bearish. Okay, we are bearish, and we said, hey, 43.75, if we get a consistent close above that consistent structure that goes back to what? Middle of August, you can see it there in July. Right, that 43.75 region. It's like if we close above that, then we'll step off of our bearish stance and go neutral. But it didn't happen. That's a big thing with me. If this happens, then I might think about do this. If the price is here, then I might have to make this decision, which will affect a bunch of other decisions, right? If we clear 43.75, then I would switch to neutral, and that would start to affect other decisions. But we didn't. We didn't clear 43.75. We sank right back down, and now we're approaching this 4,200 structure, right? So that's going to be the next big one, 4,200, and I think it connects all, down to like, the 4170 region. There's a lot of connectors in there, but that's going to be the next battleground to go through. But at the moment, for the S&P 500 index or indices as a whole, we are still bearish. And again, what you see here when we look over at ETFs that mimic treasuries is us. It just mimics what you see in the curve, right? What we were just talking about a few moments in the treasury curve. We're neutral. Why would we not be neutral on something like SHY? But when you move further out the curve to like IEI or IEF or TLT, obviously progressing further down the curve, what have we been saying for a while now? We are bearish. When I look at the curve itself and what the curve needs to do, or I think the curve needs to do, and that's just a bias, it's just a concept, it's just an idea, you got to start somewhere. I don't see any reason to own anything further out on the curve. We've been saying that for weeks, and therefore on all of these, we are still bearish on price, bullish on yield. Getting outside of the United States, you look at credit markets or debt markets and emerging markets, something like PCY, we remain bearish on price, bullish on yield. Switching away from credit markets and looking at equities, we like emerging market equities, something like VWO, we are bearish. So we remain bearish. We have been bearish, we remain bearish. Looking over at junk, going back into credit markets, so getting away from emerging market equity prices, but going back to credit markets and junk yield. We have been bearish, we remain bearish. So we are bearish on price, bullish on yield. Moving over to commodities, we have been neutral on commodity prices. We remain neutral on commodity prices as a whole index. What's up next? Crude oil term structure. Now this is USO, right? This is not something like crude oil futures. But when I look at crude oil futures, yep, still very much in backwardation. And so we're still in backwardation. We think that with the current geopolitical comments, that's sort of a bullish sign. And for crude oil itself, which you can look at something like USO here. Where's my note? I'm looking at my prop firm's note here on the other page. So crude oil, yes, we have been bullish and we remain bullish. Right? So we got that correction. We stuck with it. It's like, nope, we're still bullish on price. We have bounced back up. So we remain bullish on oil prices, but on gasoline prices. On gasoline prices, we have been neutral and we remain neutral on gasoline prices. Looking over at gold. For gold, we are switching. We were neutral because of that. It just come roaring back. And now we're switching over to bullish because the price strength has remained. And for silver, we remain neutral. We've been neutral. We remain neutral. And then finally for the US dollar, you already know what I'm going to say for the US dollar. For the US dollar, we are bullish. Okay, so that has been the weekly note starting here in October 22nd, October 23rd, 2023. Just been our thoughts. And again, remember, if you're new to the weekly note and what we do here, go to the playlist and look at the first 3 videos on something like YouTube. The YouTube playlist, weekly note. Those first 3 videos, I really go through the extreme value of having a weekly note and even a daily note, really, if, for ourselves, run a private prop firm. It's invaluable. Absolutely invaluable. Just get your mind centered on both the week and the day. So that has been what it's been. We're back to working hard. And therefore, it has been what it's always been. It's simply our thoughts, which are good until canceled, and have been only our thoughts and a look over our shoulder for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.